Okay, great. Now let me show you a winning strategy with an edge that lets you profit in bear and bull markets. Are you guys excited? Cool. So first let me explain to you what is trend following. A trending market is one in which price is generally moving in one direction. Okay, so sure, price may go against the trend every now and then, but looking at the longer time frames would show that those were just retracements. Okay, so trends are usually noted by higher highs and higher lows in an uptrend. So as you can see here, we have higher highs and higher lows. The price is moving up. That's an uptrend. And lower highs and lower lows in a downtrend. So as you can see here, we have lower highs and lower lows, downtrend. Okay, very simple. When trading a trend-based strategy, traders usually pick the major currencies as well as any other currency utilizing the dollar because these pairs tend to trend and be more liquid than other pairs. Liquidity is important in trend-based strategies. The more liquid a currency pair is, the more movement, aka volatility, we can expect. Okay, so the more movement the currency exhibits, the more opportunities there are for price to move strongly in one direction as opposed to bouncing around within small ranges. That's why it's very, very important to have volatility. Okay, and volatility is your friend here. Okay. Other than eyeballing price action, you can also make use of technical tools to determine whether a currency pair is trending or not. It has been used by traders over the last 100 years and is a profitable trading approach that has withstood the test of time. Realistically speaking, you cannot base a trading system on just a handful of trades. We need to judge it based on at least 100 trades to determine whether you have an edge in the markets. And we already discussed this. Okay, consistency is key. Alright? Likewise, just because you get stopped out of your trades a few times while attempting to let it run, it doesn't mean it's not a viable approach. Do it 100 times and let the numbers decide for itself. Okay? Take advantage of the law of large numbers. Another point here is trade volatile markets. Okay, this is where trend following really stands out on its own compared to other trading methodology, which focuses on a few markets or just one market. Trend followers trade many markets. Okay? Basically, the point here is the trend is your friend. Okay, trade with the trend. Okay. All right, cool. So now let's talk about the trading strategy rules. So here I want you to take some notes. Okay, focus here on what I'm about to show you. So we have 5 rules. Rule number 1 is if 5 SMA and price are above 200 SMA, then it's an uptrend. So we're gonna use 2 moving averages in this strategy: the 5 SMA and the 200 SMA. Simple moving average. So rule number 1, if 5 SMA and price and the candles are above the 200 SMA, then it's an uptrend. That's how easy and simple it is to determine an uptrend. If rule number 2, if it's an uptrend, then wait for price to close above the 5 SMA. So now we wait for the candle to close above the 5 SMA. Okay. 3, if price closes above the 5 SMA, then enter long or buy at the open of the new candle. Okay, so we have the price closes above the 5 SMA, then we enter for buy or long at the open of the new candle. 4, if long, then place a stop loss of 2 ATR from your entry. Okay, so the stop loss here is 2 ATR from your entry. And 5, last but not least, if price goes in your favor, then take profits at 1 to 2 risk to reward ratio. That means the stop loss distance is 1 and the take profit is twice as much of that, so 2. So you're willing to profit twice as much what you're willing to lose. Okay, so 1 to 2 risk to reward ratio. And of course, it's vice versa for downtrend, short, or sell. Okay, so if 5 SMA and price are below the 200 SMA, then it's a downtrend. If it's a downtrend, then wait for price to close below the 5 SMA. If price closes below the 5 SMA, then enter short or sell at the open of the new candle. If sell or short, then place a stop loss 2 ATR from your entry. And if price goes in your favor, take profits at 1 to 2 risk to reward ratio. That means twice as much what you're willing to lose. Okay, so these are the 5 rules. Okay. It took me a lot of years to figure this out. It took me a lot of testing, and I'm giving it to you in this presentation. Okay, so take advantage of that. All right, this strategy is awesome. Okay, test it and see it for yourself. So here are some examples for the uptrend. So as you can see here, we have the entry right here. Okay, so this is our signal right here. We have the purple line is the 5 SMA, and the blue line right here is the 200 SMA. So if the 5 SMA and price, by price I mean the candles, are above the 200 SMA, so we are in an uptrend. So we wait for price so you wait for price to close above the 5 SMA, sorry. So you wait for price to close above the 5 SMA right here. This is the signal, and you enter long right here. As you can see here, we made a lot of profits, a lot of pips right here. Okay, here's another example right here. The purple line again is the 5 SMA, and the price, the candles are above the 200 SMA, the blue line right here. This is our entry signal right here. So this is a bullish candle that closed above the 5 SMA, and again the price goes up and we make profits. Okay, another signal right here. Okay, so we have the 5 SMA, and the price are above the 200 SMA, and this is our signal. The price closes above the 5 SMA, and that's when we buy, go long, and we make right here profits as well. So we make pips right here, which is awesome, right? Let's see now the example for a downtrend. So as you can see here, we have the 5 SMA, the purple line, and the price are below the 200 SMA, and we have the candle closes below the 5 SMA. So this is our entry signal, and the price goes down, as you can see here, and we make profits, we make some pips and a downtrend. Here's another example. Entry signal is here. Why? Because first of all, we have the 5 SMA, the purple line, and the price are below the 200 SMA, so that means it's a downtrend. And we also have the candle closes below the 5 SMA. So this is where we sell. This is where we enter. Okay, our trade. Stop loss is 2 ATR from your entry candle, and the take profit is 2 to 1. That means twice as much what you're willing to lose. So 1 to 2 risk to reward ratio. Okay, and we make profits as well. Okay, so these are some examples of this winning strategy. Awesome, right? Cool. So here are some guidelines. Do not shift your stop loss. You either get stopped out on the initial stop loss or make twice your stop loss take profit target. Okay. Another guideline here is trade as many markets as possible with low correlations. And of course, risk no more than 5% of your equity on each trade. Okay, we talked about that. Very, very important to have like a proper risk management. Okay, so some considerations you can ask yourself. Question number 1, do you wait for confirmation before entry? Question number 2, how do you plan the trade if you want to ride the trend and make more profits? Question number 3, how do you manage your trades? Question number 4, what time frames are you using or are you trading on? And question number 5, last but not least, which markets are you including in your portfolio? And all these answers of these questions, I teach my clients how exactly they confirm before the trade. Okay, so they need to add like confirmation order to make sure that they are in a winning trade, how to plan for the trade if they want to ride the trend and make more profits, how to manage the trade if they want to open more than one trade, what time frames are they trading on, and which markets are they including in their portfolio. Okay, so these are all questions I answer in the Trading Profit Formula Coaching Program, which I give the answer. I give a lot of coaching, a lot of examples to my clients. Okay, and we'll talk about that later on. Anyway, so there you have it, a complete strategy that allows you to profit in bull and bear markets. To be honest, again, strategy alone will not get you anywhere. Instead, you should also focus on your risk management, trading consistency, and psychology. Here's a disclaimer. I will not be responsible for any profit or loss resulting from using these trading strategies. Past performance is not an indication of future performance. Please do your own due diligence before risking your hard-earned money. Of course, we are all adults here. We know exactly that we take responsibility for our own results. All right, cool. So I hope you get a lot of value from this strategy. Use it, test it, and you will be happy that you did. Okay, cool. Awesome.